I'm going to show you guys today the trading strategy that helped me make $40,000 in a single day and also helped me get funded $5.7 million. So I want to give you guys a breakdown on one of my previous trades that I did end up actually taking on Friday previously. So as you guys know, I've kind of been a little bit ghost on social media, and I've been posting a lot recently and doing a lot of breakdowns on my free Telegram and on my Instagram broadcast channel on the footprint charts. Now I've been really just kind of ghost on social media because I've just been literally back testing not just my own results, but back testing the footprint charts. And I really have to give a big shout out to Umar and Carmine for really pointing me in the right direction when it comes to the footprint charts. And I want to give you guys as much value as I possibly can on how I've been using the footprint charts, because the way I've seen people kind of trade and use order flow is very broad and very different, and no one person that I've seen actually use the footprint charts or the heat map or order flow in general trades exactly the same. So I want to give you guys my take to try and provide you guys with as much value as possible. And really, like, there was 2 days in specific that I was actually back testing not just my own personal results, but also comparing my losing trades and seeing if there would have been any difference if I would have implemented the footprint charts at that time. And I probably would have saved myself roughly around 30%, which is why I would have roughly around 30% of my losses, which sums up to a ton of money, which is why I decided to kind of go all in with the footprint charts. And really, I didn't change anything about my overall trading system. So I have the same exact playbook. The only difference is that I'm actually incorporating the footprint charts when it comes to me actually executing and entering the trade itself. So I'm only looking at the footprint charts at key levels and right before I'm about to execute a position itself. So my entire game plan and process and a way I approach the markets is the same, and I'm keeping that very consistent. But the only difference is now when price action does get to my key level where I'm looking to take that position is when I open up the footprint chart. So I want to break down the trade that I took on Friday for you guys. This is ES on the 5-minute time frame here, and before I can give you guys like a breakdown of the actual trade I took, I want you guys to get a little bit of an understanding and perspective as to why I took this position. So originally, at first in the pre-market, when I was doing my pre-market analysis, I was looking to potentially go short under the 5112s for a move down to the 5096s after a strong earnings. I anticipated there to be some form of take profiting, and I was looking to potentially take shorts down into the 5095s as a potential take profit area, just looking for a quick pullback counter trend inside of this current market. Now, when it comes to ES, like I said previously, I wanted to take shorts under the 5112s. And when the market actually opened up at 9:30, the 5112s was a key area for me. So we have the market actually open here. We did have a lot of volume actually come in during the pre-market as well. So I really don't look to take any positions when it comes to the actual pre-market. But price action during the market open actually gave us a big rejection towards the downside. And as price action closed above this area is when I started to actually hop on to the footprint chart. So this is going to be the footprint charts here. For those of you guys that haven't seen my video before, don't know what the footprint chart actually is, essentially we're able to just dissect the candlestick itself and really look into the anatomy of what's going on inside of each one of these candlesticks. So these are all going to be considered candlestick clusters, which gives us all of the data that we need on the two major participants in the markets, which are going to be the aggressive participants and the passive participants. Now, just a quick recap of what we're looking at here is we have aggressive selling hitting the bid, and we have aggressive buying hitting the ask. We also have passive buying hitting the bid, and we have passive selling hitting the ask, just to give you guys a quick recap. Now, on the right side of the clusters, I have the delta, which is just simply going to be the difference between the bid and the ask. And then down here, I have the cluster delta as well, which tells me the entire delta of this current candlestick cluster here. So when it came to me looking at ES during the market open, we did have the majority of the trading volume being orders being placed under the 5110. So in between, let's call it the 5112s and the 5105s. This is where the majority of orders were hitting the bid and were hitting the ask. So this is where the majority of people were buying and selling at the same exact time. What was very interesting to me and what caught my eye here was that we had the majority of aggressive selling under support. So sellers were trying to push price lower. New aggressive selling tried stepping in around the 5106s, and those aggressive sellers failed, and we see a big rejection towards the upside. We had aggressive buying start stepping in around the 5110s, and price action ultimately pushed up higher and closed around the 5115s. Now, what I want you guys to keep in mind is, like, I'm not only looking at Delta. We have to look at Delta. We have to look at the candlesticks. We have to look at the amount of volume being traded. Because if we see price action is failing to break under support, or failing to break above resistance, or is trading above support, or is trading under support or above resistance, but there's not much volume being traded, then I'm not really too interested in participating. Like, if we're only seeing like 33, 69, 87 orders hitting the bid, and then 100 and 163, that's not really something I'm too interested in actually trading. But we have a ton of orders coming in, hitting the bid and hitting the ask. Like, we have an 887 and 1K hitting the bid and then hitting the ask, which ended up in a positive delta of a 271, which is pretty strong volume, considering that in the pre-market there's not that much volume over, of course, after this or after this previous candlestick cluster itself. So one thing that I'm again paying attention to is that price action did close above. We did leave a big rejection towards the downside, and the majority of aggressive selling is here under the 5106s, which that's a big red flag to me if I'm going to be looking to short off of the 5112s, because I'm going to want to see the aggressive selling have follow through. As this candlestick closed and the new candlestick actually opened up, the majority of the candlestick volume that we see here, if we look at all of the orders that hit the bid and all of the orders that hit the ask, a ton of trading activity happened here in between the 5115s and the 5112s. Notice the orders that hit the bid, notice the orders that hit the ask. So as price action pushed up higher, this is an area that I wanted to see price potentially pull back to for a retest rejection and for a possible long position. Now I'm looking for a possible long position because the market opened. We saw aggressive selling step in under the 51.6s and they failed to push price lower. New aggressive buyers stepped in and price action actually ended up pushing higher, and this candlestick delta ended up at a positive 2000 delta, which is considerably strong volume. Considering in the pre-market, of course, there's not going to be that much volume, but I really don't like to gauge pre-market activity too much because of course new participants are going to step in after the market opened. Now, when this candlestick closed is essentially what gave me my entire confirmation that I'm going to be looking to take a long position here. Let me prepare myself to actually take that position. So like I was discussing previously, we had a ton of aggressive buying and selling happening down here in between the 5115s and the 5112s, which is above my key level of support, which is good because I'm looking to possibly take a long position here up into the resistance range, which again, my pre-market plan originally was to short under this area, but since price action failed to continue to push lower, this aggressive selling failed and we didn't see any follow through with these aggressive sellers, then that's when my game plan completely switched because that setup is no longer valid. Now, when this candlestick actually closed and the new candlestick opened up, we did see price pull back into the 5115s. One thing I want you guys to keep in mind is look at the orders that hit the bid and the ask in between the 5116s all the way down into the 5114s, right around the 5115s. There is a ton of orders coming in, hitting the bid and hitting the ask versus the majority of the rest of the candlestick. We could definitely argue that there was more activity down here at the 5115s and 5116s compared to the 5119s and 5118s. So I wasn't interested in looking to take a possible position here. Now, what really made me decide to execute on this position and go long is simply because we had a negative 520 on the delta. Now, what do I mean by that? And again, I'm not only looking at delta, we have to take all of these context, we have to take all of these clues and put them together to really create a hypothesis on market direction and really look for that high probability setup. So you may be asking yourself, well, why did you go long if there's a negative 520 on the delta and then a negative 254 on the delta? Isn't that aggressive selling? Shouldn't we look to go short? That is correct, but I'm looking to go long at this point in time because we had a negative 520 on the delta, a negative 254 on the delta at this price range. The majority of aggressive selling happened down here where the sellers were more aggressive than the buyers, but price failed to follow through and we didn't see a follow through with those sellers. On the contrary, we actually rejected the 5115s. Not only did price action reject, I want you guys to keep in mind, this is a bearish candlestick. We have open, close, high, low. This is a bearish candlestick with a rejection towards the downside, but we have a positive delta. So that divergence right there is telling me, although price is trying to go down and sellers are trying to push price lower, there's more aggressive buying in this situation. And in a situation like this, there's a higher probability where we have this bearish candlestick and a positive delta, and then we have this aggressive selling fail to push price lower. There's a higher probability that price is going to go up. So I've already determined that there's a higher probability that price is going to go up based off of the data that price action is giving me, based off of reading what's going on with the interactions between the buyers and sellers. Now, really the main question I have to ask myself is, okay, if I'm right, where am I getting out? If in this position, where am I getting out in a profit if I am right? And that is going to be roughly around the 51.30s to the 51.25s for a quick scalp. So my first take profit for a quick scalp was the 51.25s, and the 51.30s would have been like my nicer take profit area when I had a little bit of a bigger R multiple, and then of course the 51.35s. Now, where am I going to get out if I am wrong? Well, if I'm entering the markets around the 51.16s, I want to get out around the 51.11s, which is going to be under my area of support. But more importantly, it is going to be under where all of this volume is currently being traded. Keep in mind, if we look at this entire area, buyers are clearly trying to hold price above the 51.15s. Look at all of the volume that's actually stepping in here. So as long as my stop loss is under both of these areas, then as long as price can maintain above those areas, we should see price action continue to go up, even if price does consolidate for a little bit longer without tapping my stop loss. Because what can happen a lot of the times is if you have a bad stop loss placement, you can get wicked out of the trade and price continue to go up in your favor, which is another thing that I really liked about order flow and why I implemented it, and mainly the footprint charts into my trading, because I could be more accurate with my stop losses. When it comes to my stop losses, I can have a lot smaller of a stop loss, which of course in turn gives me a lot larger of a take profit, which again in turn gives me a higher R multiple on any trade that I'm taking. So I'm able to move my stop loss to break even a lot faster than the majority of people who are waiting for just price action signals and price action confirmations to get into their positions. And there's just a more aggressive edge in the markets when it comes to this type of trading methodology. Now, again, I haven't changed anything about my system, anything about the setups that I look for. And really, I just try and focus on reading the interactions between the buyers and the sellers at these key levels. And this is going to be a trading methodology and a trading system and a trading edge, if that's how you want to call it, that I can apply really in any market condition, because all I'm doing, it's not like a black and white, I need to do this, I need to wait for this. This is me interpreting the data that I'm getting off of the footprint charts and reading the interactions between the buyers and sellers. So it doesn't matter what type of market condition price is going to be, or what type of condition the markets are going to be in the next 3 months, 6 months, 2 years, 3 years, 4 years, 5 years. If I'm able to read the interactions between these buyers and sellers effectively, then there's going to be a higher probability of me making money in the long term, which is why I've implemented this into my trading system. So when it came to my entry point, essentially, as price action was rejecting the 51.15s again is when I decided to execute. I executed around the 51.16s with my stop loss below the 51.12s. Like I said previously, my take profit was up here at the 51.30s. Now, I did cut the position at the 51.25s on a quick scalp as price action was approaching this area, just simply because I was satisfied with the R multiple. I ended up securing a 2R multiple because for me, typically what I've noticed in my trading history, going over the previous results that I had, and that's one thing that I've also noticed in my back test. Not only would I have saved so much money if I would have implemented the footprint charts a long time ago, because there's just simply positions that I wouldn't have taken, but on Fridays my trading performance typically isn't the best. So I decided, you know what, I'm already green on the day, I'm already green on the week, I made $40,000 yesterday, I'm just going to cut the position and call it a day here. So I ended up securing a 2R multiple on these shorts, but that is going to be as simple as I possibly could break it down for you guys. There's going to be more content, of course, to come out on the footprint charts for you guys and how I'm using the footprint charts on a daily basis. And I hope this video provided value to you guys. If you guys are trading indices or futures, doesn't matter if it's futures or indices, I highly recommend you guys get into the footprint charts and just reading the interactions between the buyers and sellers. Now, I know at first this could be definitely a complicated thing to kind of understand because there's just so many numbers that you're going to be looking at on the screen, and it definitely can feel very overwhelming. But again, one thing that's going to really help you through this learning curve when it comes to implementing the footprint charts into your trading is going to be backtesting. Not just backtesting what happens and how the interactions between the buyers and sellers change at these key levels, looking for finished auctions, looking for unfinished auctions, different things along those lines. But it's also really just going to be experiencing the footprint charts for yourself live and taking notes. That's one thing that's going to be huge in this market, because I could teach you everything that I know right now about the footprint charts, how I've been using it, and how I've been trading it pretty effectively over the last few weeks to the last few months. But experience is going to be your biggest teacher when it comes to anything that's trading related, and you have to go out and experience it yourself. So I hope you guys enjoyed this video, and I will talk to you guys in the next one.